joining us from Mountain View, California, on what the Fed is likely to do. We have Axel Merk, President and Chief Investment Officer of Merk Investments. And Axel manages currency funds with a combined $500 million in assets. And Axel's a Merk hard currency fund, that's what it's called, beat 97% of its peers in 2009. So some pretty good returns. Axel, I guess people are waiting for the Fed to, I guess officially confirm that they are going to expand their balance sheet. But it's interesting because you've said that the Fed's behavior since Jackson Hole is bizarre.
Yes, hi, good to be with you. Well, in Jackson Hole, Ben Bernanke, he said that inflation expectations in the markets are too low. Indeed, Bernanke joked that in an environment where inflation expectations are too low, it wouldn't hurt if the market lost trust in the Federal Reserve because that would raise inflationary expectations. And if you combine that now with the FOMC minutes, where it's written there that the FOMC is disappointed that the market didn't read Bernanke's signal properly, and they have to do a lot more in communication, which we've seen in recent weeks with all these Fed officials coming out pretty much touting the quantitative easing programs before they've been officially decided, something that's unprecedented in Fed history, where decisions are made by steamrolling the dissenting members. And so this is a Federal Reserve that's very much determined to go forward with quantitative easing. In our view, part of the goal is to devalue the dollar in the process.
Yeah, the dollar, that's right. You brought that up as well, Axel. You said that Fed Chairman Ben Bernanke may not only be interested in a weaker U.S. dollar, but that he is actively working on engineering one. What does that mean? The dollar is pretty weak these days. Will this weakness continue?
Well, think about it, first of all. Even at the Federal Reserve, they're not even sure whether this quantitative easing program is going to work as far as stimulating the economy per se. The economy has already had plenty of money made available. At the same time, people don't take it. Now, at the same time, when you engage in quantitative easing, you're doing two things. One is you're increasing money, the monetary base, you're printing money. So that in itself, all things equal, should devalue the currency. But on top of that, when you buy government bonds, what you're signaling to the market is now these securities are intentionally overvalued. So a rational investor, domestic or foreign, is going to take the money overseas. That's why traditionally when a central bank engages in quantitative easing, a currency takes a nosedive. On top of that, if you think about what Bernanke has testified in the U.S. and Congress, which is that during the Great Depression, one way the U.S. got out of the Great Depression was to go off the gold standard by devaluing the currency. Bernanke says that a weaker dollar is not inflationary. Now, we disagree with that. But Bernanke has the mindset that you need to weaken the currency to get out of a depression, deflationary type of environment. That's exactly the environment that Bernanke thinks we're in. And so I believe that these actions that are being announced, and to an extent have already happened, of course, with the mortgage-backed securities programs, are very much actively working on a weaker dollar in order to stimulate export growth.
Okay, so with a weaker dollar then, Axel, what does it mean for the global currency markets? You know, we've seen the euro surprisingly tick back up to 140. In fact, I think you were one of the first to be optimistic on the euro when many were calling for parity earlier this year. But at 140, Jean-Claude Juncker, who's the head of the European Finance Ministers Association, says it's really not fair to the euro, which doesn't deserve to be at such lofty levels.
Well, at this stage, Juncker is just one voice. Typically, when it comes to the euro, the industry doesn't complain unless there's been an extended period of euro strength. In this case, the appreciation was too fast for the industry to complain. So at this stage, the political pressure in the eurozone is far less than the political pressure in most other countries where people are concerned about a strong euro. Trichet, the head of the European Central Bank, has continuously only complained about excessive volatility in the markets, but typically does not complain about the strong euro itself. Now, one of the reasons why we have been more optimistic about the euro is because we think the monetary policy in the eurozone is more robust than that of the Federal Reserve. And also, as far as the fiscal policy is concerned, it's not as easy to ramp up spending as it is in the U.S. And so given that most countries in the world like to have a weak currency, we think the eurozone will ultimately actually be stronger because they're less capable of trying to weaken their currency.
Hey, Axel, speaking of countries that like to keep a weak currency, what's happening with the Chinese renminbi right now, the yuan? It's interesting because your fund is actually 42% in yuan when people are not expecting that much movement in this currency. What's the thinking here with the, I guess, the heavy holding position that you have?
Well, our Asian fund has a heavy yuan exposure. And the reason is that the Chinese are ready. But the Chinese are going to move when they perceive it in their interest, not because of bullying by the U.S. And the interest that's going to drive Chinese policymaker is inflationary pressures. It is simply not effective to try to tame inflation with administrative measures. And also, the Chinese are at what we call at the higher end of the value chain in terms of the goods and services that they produce, compared to most other folks in Asia. And any country that produces goods and services at the high end of the value chain has pricing power. We saw that in the spring of 2008, and that's one of the reasons we disagree with Bernanke that a weak dollar is not inflationary. In spring of 2008, it wasn't just commodity prices going up. It was Asian exporters raising prices, and American importers had to accept those. China has pricing power. China produces very sophisticated goods these days and is able to raise prices. Now, of course, they don't want to do it overnight. They want to move in slow steps. But China has been getting all the infrastructure ready, the regulatory environment ready, and they will move. They're just not moving as fast as most policymakers
yeah, this all
would like them
sounds
to.
great, but we still have investment banks expecting maybe 3 to 4% appreciation. What kind of money are you going to make just off 3 or 4% appreciation on a 42% holding?
Well, our Asian fund is mostly an opportunistic play that something may indeed happen. And what we do is, unlike some folks who only invest in the Chinese yuan, we're diversifying to other Asian currencies because we think of the dynamics, how they will be unleashed in the region.
Okay.
But by all means, our Asian
Axel?
fund is an opportunistic play that something will happen in Asia.
Axel, nice talking to you. We're out of time, unfortunately, but good
My
to have
pleasure.
you. Axel Merk joining us from Mountain View, California.